sabotage their own exits and what it really takes to get ready for exit. So if you've ever thought, I'll deal with selling my business later, this one's for you, because later might be too late.
The business owners, really, most of the time, they start out as a technician. And that's really where my heart right now, and for a long time, making sure that these makers of things get protected. Not knowing what you don't know is a big problem.
You don't have to be the smartest person in the world to be an entrepreneur and start a business. Sometimes I think we're some of the dumbest people.
Your numbers tell a story to your target, acquirer. And you have to not only have to have your numbers just by itself telling the right story. When you go to exit, you need to have a professional. If you can't do it, you need to have a professional to be able to tell the story.
Meet your host, Ben Brickway, CEO, attorney, M&A advisor, exit strategist, a husband and a dad. Worked with more than 2,000 business owners across industries. This is Exit Worthy. Ben is a licensed attorney, registered rep, and M&A advisor. This show is not legal, financial, or investment advice. We haven't tailored anything here to your situation. For that kind of help, hire someone who has your back and knows what they're doing. So buckle up, Buttercup. Here we go.
Well, thank you for inviting me.
So you probably heard in my intro, and I'll say it here, like we came together working on a deal, and I'm just throw that elephant in the room. Like, I was like, who the hell is this lady? She's intense. She doesn't pull punches. She doesn't hide her opinions. And I'm like, I don't know if I'm going to like her, but I adore you, just for the record. I want to say that. And not just because I'm terrified of you.
That's a part of that, but the feeling's mutual. I felt the same way. Who the heck is this guy? And I thought I'm a straightforward person. And I think we've shared a lot of things in the process and realized that we have a lot of values in common. But the one thing that is very loud as common attribute is the shortest distance between 2 points is a straight line. And we both share that.
Well, do you want to maybe just kick off, and for people who don't know you or don't know of you, you want to tell the story? Who are you? What kind of work do you do?
Well, I don't think you have enough time for me to tell who I am, but I'll try. I'll make it very short. Yeah, I'm actually right now I'm working as a CEO mentor, and I prefer to call. Yeah, I think mentor is a good word, because I really prefer to teach CEO how to fish rather than fish it for them. Because I really enjoy the strategic work, kind of pulling all the pieces apart. Love to find the different levers, whether it is the lever to protect them or the levers to help them kind of swing, at multiple times. Sometimes you're so deep in your business that you don't see it. That's when the light bulb comes on. That's what gives me most joy. But I would call that the long game. So helping businesses scale with ease and speed and, exit with a big multiple. I'm going to talk about that. But inevitably, in working with this situation, you have to play the short game. So, there are urgent and important things that you gotta help them deal with. And so that's the point where I do a little bit of do it with you, or sometimes try to minimize it, but do it for you to help them get unstuck. So I don't love the do it for you part. Because I figure, hey, I've earned my stuff, and I don't have to do all the detail work. So that's when I'm really thankful for professionals in a vast, network of vetted ones, who are great in their own zone of genius, like yourself, that I can pivot with and, partner up with. I'm very collaborative and just, really see the value of people coming together.
So what kind of owners do you work with, or what size businesses?
Well, to be honest, currently I'm working with between $1 million and let's say $20 million. But I'm working inside a group called the Pinnacle Global Network. And I think that's the client that, we and I met through. But anyway, the group is a group of like-minded, growth-minded people, whether they're owners or mentors. I give about 5 days a month, in helping and serving this group. And it's really enjoyable. I would say that I get more out of it than they do, because I grow with it, and the collaboration and all that just really, help me in my own mindset. I'm a furious learner. But outside of that, I have been coaching and consulting businesses from $1 million to $100 million. And before that, I was really in mergers and acquisition, doing really big transactions, restructuring, buying in distress, managing portfolio. And those are a lot more zeros, but just making big moves. And that piece of my life gave me the insight of watching these amazing founders and CEOs, grow their businesses internally and organically while we make the big moves on the external transactions. So when I stopped that part, my whole game is I want to learn how to do that. And that's why I switched over to the organic growth side. And I also started two businesses but I scaled two businesses in the meantime. My coaching career is kind of, I was in hiatus for a while and I just kind of came back, dipped my toes back in for the last 2.5 years.
I'm glad you did.
Thank you.
But can we rewind? And do you want to share your background? Where did you come from originally and what got you into all of this?
You couldn't tell from my weird accent? No, I'm kidding.
I wasn't going to call it out, but yes.
Well, I was born and raised in Hong Kong while it was still a British colony. And I came here when I was 20 years old for higher education. And my dad was really all my life, my dad is and was the big person in my life that he inspired me. Every essay I wrote about, the person I admire most and person that affected my life most and all that, it's my dad. A lot of what I do, I look back, it's really the things that my dad taught me or through osmosis. So I came here thinking that I was going to be a lawyer. God bless me, I'm not.
Nobody needs that in their life, let me tell you.
Well, the thing is that, in my culture, way back there, you're being taught to, and you're not encouraged to speak up. You just take notes, put your head down, right? So when I came here, I was regardless, I went from Hong Kong to Wisconsin-Madison. So that in itself was a cultural shock. But getting into the classrooms, I could not get one word in for 2 weeks. And I said to myself, and at the time I was still in the British system, thinking that I was going to be a barrister. And so would be like the litigator here. But I thought to myself, if I couldn't get one word in, how the heck am I going to be a barrister? So I immediately pivoted and said, okay, what is my zone of genius or at least my distinct advantage? Because I got to assimilate and all those criteria. So I switched over to doubling in accounting and in management information systems. So all left brain, it shut down my right brain.
It blows my mind knowing you that you sat in a room and couldn't get a word in edgewise.
Well, I've grown better. I've grown since then.
Yeah, anything, was there a moment? Is there something that switched in you where you said enough of this? I'm ready?
I think probably it's just experience and also my prior training. When I got into the high finance, private equity, distressed equity kind of life, I had to speak up. I was driving a lot of the negotiations between constituents. I had to speak up. So that slowly, and, I wasn't speaking like this. I was speaking a lot, heavier handed just because it dictated that.
I've heard that side of you too, so I believe you.
Yeah, it comes out sometimes.
So then fast forward through all of this, you and I came together. I don't think we want to talk in detail about the deal we worked on together, but in general, maybe let's talk about how people can wreck their own deals when they're selling. And do you have any stories in general to tell about how you've seen people who are trying to sell a company shoot themselves in the foot or otherwise screw things up?
I have a lot, but I'm trying to draw the parallel with kind of the deal that you and I experienced. Given what we've both seen and lived through in our career, I'm sure a lot of these points I'm going to talk about would resonate very much with you. I think that when people talk about sales, they talk about how the salesperson, if you don't kind of shut up after you got the deal, you talk yourself out of the deal. So sometimes, because if you think about it, a business owner, really most of the time, they start out as a technician. They're great at certain things they do. And that's really where my heart right now and for a long time has been, is in kind of like making sure that these makers of things get protected. I remember way back, I think it was in 2000, something like that, I saw Annie Leibovitz. I don't know if you remember that. Annie Leibovitz is my photographer that I admired. And I remember reading on news that she was losing her entire life's work and also her house because she got into some private equity funding with her growth mode. That's the moment I said, oh my gosh, this is crazy and these people need protection. And all of those, I mean, a lot of was it Taylor Swift? A lot of things in the news you could see how they didn't know what they didn't know and everything just looked great, on paper. So that's one of the things is not knowing what you don't know, and thinking that because to succeed as an entrepreneur, you have to be very brave. And so you think you have this kind of Superman syndrome and think you're invincible. But not knowing what you don't know is a big problem. Now, the next thing is when you know what you don't know, you go and find an advisor or a professional to help you in that area. But not having the right criteria of who you're hiring and knowing what they're supposed to do for you and knowing your end game and telling them that that's your end game so that either their own limitations or their own agenda don't get in the way. And I find myself these days, whether it is in finance or marketing or deal making, really writing a lot of guides to business owners and say, look, before you do this, make sure you know all these things first. So it's not even the how, it's just like the pre-criteria. I personally have a story to share. In the old restructuring days, I woke up one day and became a restructuring specialist just because the market just fell off. And my whole portfolio went into 60 cents on a dollar, 50 cents on a dollar. And so I'm like, okay, I knew nothing about any of this. So I went around the country looking for a top bankruptcy lawyers because that's the alternative, right? I didn't know how to maneuver there. I ended up interviewing the managing director of a top bankruptcy firm in LA and also the guy who actually wrote the bankruptcy code. And so I hired both of them for my portfolio. But the managing director has a lot more business sense. Not that the other guy doesn't. He's very well revered. But sometimes, just in between lines, the calls get made differently. And so the end result was when I relied on the person that has so much credential, wrote the bankruptcy code, when I relied on him, and also I was young, and I lost a big bluffing game with a big media mogul in New York, and I always still continue to blame myself for that company not being around anymore. And it's a creative joint, I can tell you who it is, but the good thing is that they moved over and joined another business and started their own credo again. But no, I blame myself for that.
Yeah, and that's impressive. So you just went out, you woke up, you're in restructuring, you just put your head down, you went in and talked to these folks. What's the takeaway, or what are some hints that you could give somebody when they're hiring professional advisors to avoid getting burned?
Well, I think checking the ego at the door is important. And you don't really know, but as you talk, you can tell the different archetypes of people. Ben, you come across as a hugely wanting to serve guy and wanting the best outcome. You really live for the best outcome for your clients. And there are people that talk the talk and don't walk the walk. When push comes to shove, you can tell that what they stand for, their own principle or their own whatever it is that their focus is, would stand before your agenda. I remember, that's another, I'm being vulnerable now. I remember I was calling an investment banker. You live in Colorado, right? Yeah, it's a Colorado company. And I was calling investment banker on Thanksgiving night. And I said, how are you having your Thanksgiving meal? Your client is going to go into bankruptcy court tomorrow if you don't get this deal done. And I'm like, oh my God, Pandora, you're looking back, talk about intense, right? But it's really, do your people lose sleep over your outcome? And you really want that because you want people to think for you. And I guess the other part is really competency. And you really just got to check the, what they've done and kind of talk through your situation and really find the right mentor or consultant to guide you through the process. I've been very lucky all my life. Every change, I have multiple pivots. Every change, I had a mentor.
any of them stick out? Like, who's your favorite mentor and what did they do for you?
It really, that managing director he was from Stubman Treaser and Glad. He was the managing director there, and he has been my mentor for a long time. What stood out is that side. He's very competent, and we always play good cop and bad cop in a negotiation. He's always the good cop, and I could be the crazy client or whatever, right? So that worked out really well. But where it is he knows me well enough that when I'm kind of flaring out, he would literally, when we're present together, he would put his hand on my head, and that just calmed me down.
Boy.
But that's just the personal relationship part. But at the end of the day, you just need to know that you can trust this person to want to create and help you create that outcome. And their stuff is no longer important when they're working for you.
I think that nails it. And that's why we come together on this, because we'll go fucking fight battles for our clients. I've seen you do it. We've done it side by side. I can't wait for the next time. But there's this different school of thought, and especially with these, and you said technicians as owners, right? And I tell stories to people sometimes from stage and get in trouble when it doesn't land, but it's like, you don't have to be the smartest person in the world to be an entrepreneur and start a business. Sometimes I think we're some of the dumbest people. Smart people go get a paycheck every 2 weeks and get pensions and 401k matches. We're out here because we're generally really good at doing something, and we find a better way to do it, this technician idea. And then we see these blind spots, and like lawyers, for example, we'll pick on them because I am one and I can do it. Like, most of them suck. Like, they come in here and they don't understand how it really feels when you're an entrepreneur and at the end of the month, there's not enough money left for payroll. And you've got to look and tell your family, like, hey, we can't go on this trip that I promised you because I've got to put money in. And these lawyers, like, they don't understand it. It becomes an ego play for them, and they're advising on things they don't know about. And it's a really tough balance for these entrepreneurs to say, look, I've got this blind spot. I've got to get it covered. This is a professional. They're highly regarded. They're top ranked. They charge $750 an hour. They've got to know what they're doing. And then they don't. And that's huge. Have you run into that on anything?
Well, first of all, I think the art of listening is important. And when they don't listen, I mean, I've heard so many of my clients complain about certain professionals. It's like, wait, I don't feel that he heard me or she heard me. Or the other way is, oh my gosh, this is so great. I feel heard for the first time. So that's a good criteria.
If you're advising somebody and they want to go they need to hire a lawyer or a CFO or somebody to help them in their entrepreneurial venture, what are the red flags or the green flags you'd have them look out for?
I mean, I talked about a few red flags, but really, depending on what area, I mean, I hate to say, the scalability thing is so big these days, as everybody scale your business. So everybody start to put what they do in some kind of a box offering, which is great, right? If you can pull it out. But there are outliers here and there, and that's the art of, hey, making sure that they can actually enter this box and serve them right. Or you tell them that you can't get into this box, so there's a different offering, or you got to go somewhere else. The issue is that they're providers that, regardless of what the situation is, they just pass everybody through this box. And it's no good, because this is not, I mean, I'm not asking for every custom made thing, but tell me what your box is and tell me how my can fit into this box for maximum engagement, and then tell me what extra. They're too afraid of the extras. They just want to make the sale. Yesterday I was on a CEO group, and somebody was talking about how they were the provider. They go, oh, I pitched the whole thing from soup to nuts. I always give them three, and I was for sure that they would pick the top box, and then they picked the lowest thing. I was discouraged. So me, with my feeling for CEO, I go, don't be discouraged. I said, look, if you have a lot of leads, then make sure you filter the leads out so that it actually is, you're able to offer the packages that you really want to offer. Or the other way around is if you don't have a lot of leads and you want conversion, you know, even if it's the lowest level of engagement, it's a door open. That's for the next step, right? Just serve your client crazily, get addicted to your clients, and, you know, and you would be able to go up because you've proven your value. But flipping around is when you hire, that's the kind of thing that you want to look for, is the competency, the culture, whether they fit your culture. I mean, you could get your whole account, like, let's talk about lawyers. You could get your whole, you know, whoever deals with the whole company upside down when you put in a lawyer in a pre-merger or in a due diligence process that just drive everybody crazy. So it's culture also.
Yeah, do you think part of that is the reasoning why people wait so long to get help and engage with, we'll keep picking on lawyers. Like, we see these deals where people don't engage the lawyer until the last minute. And I'm just curious your thoughts on why do people wait so long?
The Superman syndrome, Superwoman syndrome, like, I can do this. I think part of it could be cost, but part of it just, again, they don't know what they don't know. I'll tell you what, I have an example about IP. So I have a private client that they had a company, they registered the IP, and years later, they're now having an issue. And I go, what happened? And I didn't really listen, like, he didn't tell me all of it. I just heard, we unregistered something and we re-registered something else. I'm like, well, rule of IP, you don't, like, just take something off. You don't just do that. So I'm like, that's a red flag. And the same lawyer, I think, is doing a new thing. And I'm just like, is this a Delaware company or is it a C Corp? And as I was looking at it, I go, wait, there are same names under the same category, but being listed. Like, did you guys really do the right search? So I flagged it, and now I have created a whole issue because they were ready to launch, and the name may not be good. You know, it's really them not knowing what they don't know.
Yikes. So when you're working with a new client or just a client in general, when do you think is the right time, or when do you start introducing the idea of talking about an exit or an exit strategy?
That's interesting because I'm of the belief that, have you heard of the best time to plant a tree?
Now?
Well, that's the second best time. Yeah, the best time was 20 years ago.
Oh, okay. You're getting all philosophical on me. I wasn't ready.
Yeah, well, unfortunately, I'm a little spiritual, but yeah, I think that it's now. It's now because you want to build a business that you want to own, and you also, while you may think that, oh, I'm just doing this just to, like, because I'm passionate about it, but I have seen so many businesses, including my dad's business, which pains me. But he pivoted to, he doesn't make his money that way; he makes his money another way, but. He just go, when China was coming back in and he didn't want to work through that, he goes, Pandora, I have decided not to pivot into the China part of life for my business. So for me, I already knew what the decision was, right? So I also, one of my businesses that I own jointly with my ex is a high-end audio distribution company. So we're importer and distributor throughout United States and before the tariff, Canada. But so what happens is we sell to retailers sell to homeowners of these high-end audio gear. So what happens is that I see a lot of these cottage industries, including mine, big owners, big things. Every year I go to shows, I see them, some of their life changed or their health changed, you know, and they just shut down. And you hear news about, oh, this guy just passed away and he left his whole business hanging or whatever. They don't do planning. And what a shame. Well, that would just mean that you've created yourself a job, not a business.
It's tough. It's one of the things I try to teach to clients too, is the businesses that are most attractive to buyers are the ones that the owners want to sell the least. Right? So the easier, the better that business is, the more sellable it is, the less you want to sell it. But exactly what you're saying is it gives you that option. So you're not here wasting years, wasting the time, wasting all the things you put into it. And you just say, look, it's sellable if I want it to be. And that's some of the best, because I've had some heartbreaks too of clients who, as we're trying to get a company ready, the guy dies and the employees, his family, other people just got the business, literally stole everything. We'll do a case study on that some other day.
Well, it doesn't even have to be death. It's just how many of the business owners walking around, you see that they're not of optimum health, and they're like, a little bit of, deer in a headlight, and just way overworking. Part of what if Pinnacle Global Network, has a scale method. And so what we talk about is you want to be founder independent and team led. Those are the two criteria. And that's when you could talk about exit. Before that, you would just be giving it away at discount if you find the right people to exit with.
So when that topic comes up and you're talking about that exit and why you should be independent of the founder, what kind of things can you help a business owner fix?
Well, I am a very strategic person, so I first try to understand their business, where they stand from their viewpoint, and then also looking outside in to figure out, are you optimizing your business? If you were to be ready to sell today, which a lot of them are not, if you were to be ready, like what does your business look like? Where's the threat? Where are the opportunities and all that? So I do a big strategic. Sometimes I don't let go until I fully understand, me. I fully understand it. Okay, don't go there. Yeah. So there are pivots. Like, let's talk about exit. The exit value or the enterprise value is a mathematical calculation of the EBIT or EBITDA, whatever you want, or sometimes revenue, depending on which business you're in, times a multiple. And so you can do all you need to maximize whether it is revenue or gross profit or, all of those EBIT, EBITDA, right? You could maximize all that. That's internal work, the processes, optimization. But then there's the multiple. Some of that you can't help it. I mean, if you were in the AI area, you're talking about at least 70 times, revenue. Well, the latest deal I read about is zero revenue, but, it's at $12 billion for a female, owned business, right? So the thing is, that multiple, while it's affected by environment or the industry you're in, it's also affected by how you brand is positioned. So you could have a higher multiple or lower multiple as a result of that. And so that's kind of the work that we work with the clients. So for example, if you have a manufacturing business, but inside there's a system that you create to make something really great. You pull that out as a scalable model, and all of a sudden you could be a SaaS for all I know, right?
Yeah, I love this. This is where I geek out, and I know you and I have talked about this before, but especially in this $1 to $20 million kind of business, these smaller companies, these owners are getting this terrible advice on it's EBITDA or SDE times a multiple, and these brokers are getting a multiple from this book that they buy from some old school brokerage supply company that says, well, the rule of thumb says that you're in this industry, and I call bullshit on it. I think the multiple you get is so much more dependent first on the size of the cash flow, like how much cash flow do you have? The more cash flow, the bigger the multiple will be. Then there's a range for each of these, and the things you're saying, we call them value boosters here. But you get a bigger multiple, the sexier that business is for somebody.
Mm-hmm.
You call out a great example of you've got manufacturing, but there's SaaS capabilities built into this operating system of this company. And I think so many business owners get this disservice from, and you called it before, like the advice in a box, or does it fit the box? People can't think to say, look, owner, here's the other things you can do. So you probably saw my eyes light up when you mentioned that. But yes, the components of the business are worth so much more than just what the financials say. And I wish more owners would understand that and be able to work with somebody, hopefully someone like you, to recognize that from very early, so that by the time they talk to me when they're saying, hey, I'm ready to sell, or I need to sell, those are very different. But hey, can you please look at selling this company? I'm like, well, what did you do back here? And they're like, well, I don't know. I showed up. Here's my financials. I'm like, well, I can show you two very different companies that have the same financial statements, one that will sell for a premium, ungodly numbers that people would never expect. And another one that'll sit and will end up closing its doors and liquidating. Why? Well, because the owner worked 60 hours a week. There's all sorts of traps and entanglements. The market doesn't have any growth. And on the other side, the owner doesn't show up. It doesn't need to. He's off building and doing things. So yeah, I like those answers.
But Ben, for the work you do, I mean, there's one specific area that they should be talking to somebody like you earlier than later, which is, some people figure, strategic alliances are great, or somehow we get together to do joint ventures or whatever combined version of efforts they come together for. But those agreements, or sometimes the lack of agreement, a handshake, could be the bane of their existence. They could have signed away or given away what I call the lien of their future. And for people that are in the know, you just take a quick look at it and go, wait a minute, you shouldn't be doing that. Do you mean to do that? Right? Or wait a minute, you just have a handshake? There's so many horror stories to tell, and checking with somebody like yourself before they enter into any agreement is important.
It's one of my hidden superpowers, you're right, because we're running this advisory firm to help people with these M&A transactions. But my background and frankly, that I own a separate law firm comes in very handy, because we are able to look at that, where your broker off the street has no idea. They don't even think to ask for, well, where's your operating agreement? Or what happened to that partner that you had on years ago who you bought out, but there's no paper trail? I mean, we've seen deals blow up when that silent partner isn't so silent anymore. And like, no, I own half of this and you don't get to do shit without asking me. Who are you and why are you in my office? And the look you can see on the seller's face, they look like a ghost. They're like, oh, yeah, I forgot to tell you that. Well, you just screwed up your exit. Congratulations.
Well, the corporate governance is sometimes it's not something they pay attention to. But when you talk about exit, it's important. I remember, this is an older story, but I remember there was an investor. Let's say that he's an adversarial investor, not the Carl Icahn of the world, but close to it. And, I met him in a deal where I had the fulcrum securities. And so we ended in a way that he felt we were able to get more than he really wanted to give. But my yes or no could stop the entire transaction for the entire empire. So I knew I had leverage, and I'm getting it for my shareholders, right? So a year later, I saw him in the boardroom of another restructuring that I did. I go, oh, hey, how are you? So knowing that what he was trying to do was accumulate the shares so that he could have a say and screw up whatever we were doing, right? So that he could blackmail or whatever you call it, greenmail us. 3 months later, he started flexing his muscle. And what happened was I said, so-and-so, I said, did you look at the corporate governance? Did you really look at what you bought? He goes, what do you mean? I said, you can't do this. He goes, why? I said, you have a certain kind of shares and we hold a different kind of shares. Ours are 10-1 voting and yours is 1-1 voting. Did you see that? And he just, his face turned white. And anyway, so that's how we were able to fend off for that transaction, a corporate raider like that. So, bringing back to this level, your corporate governance is very important. That's really...
I think it's a huge turning point, right? You think of these small companies, almost all of them transact as asset sales. And why? Because it's scary for buyers. And if the corporate governance, if an owner only took a little bit of time to go hire a professional and clean up their corporate records, I think a lot more of these could go as stock sales. There's a lot of benefit. I'm not the tax guy. This isn't tax advice, by the way. In general, the owner of Main Street and upper Main Street businesses, if they can execute on a stock sale, they're in a much better place. You can get into QSBS and all these things on some other day. But the problem is so many of them can't do it because they never took the time. They formed their LLC on their own. They don't have any records. And it's not a death blow necessarily if they don't have it. You can still create it and fix it, but none of them take the time because maybe it's your Superman or Superwoman complex. Maybe they just hate lawyers and they've had a bad experience. But I really wish more of them knew that it's okay to go in and find a good corporate lawyer who knows their stuff to start fixing this, because even if you don't go through on a stock sale, even if it's an asset sale, the buyers are still looking at the books, at the corporate books. The due diligence is still going to want to know, and that can make or break your indemnification, your reps and warranties, all these things that the lawyers fight about when everybody else thinks the deal's done. And you and I both know that the lawyers can fight about things at the end after two reasonable people have shaken hands and said, let's do this deal. And the lawyers can come fuck it up.
Exactly. And that's what happened in the deal that we were talking about. We managed to salvage it, but that's really, we were at the brink of that.
Well, what I learned about you at that point is I've never met somebody as stubborn as I am about not wanting to lose. And it's not even losing for ourselves, but it's so stubborn of I can't bear to see a client go through a bad outcome, and I will disproportionately put effort in to help somebody win when I think it's the good cause and it's the just cause. And that's when I decided I liked you, when you did the same thing. So I'll always remember that.
Well, thank you. I think we fall in love with our clients and we want the best for them, and that's really what it is.
And it's rare. I just thought everybody operated that way. They don't. Some people are just hourly meter mills. Like, let's just see what we can do. Anyways, we'll have a lawyer bashing session some other day. Any parting wisdom? Any last messages you want to give to business owners that are struggling to think through, like, I know I have to exit someday, but how do I get out in front of it and do the right thing?
Well, I would say that, and I have given this advice a lot. There are a few pieces. One is that you start with the end in mind. So some people are like, oh, I can't even think of it. I can't you can see the energy when you talk about that. They go, oh, I'm looking away. Do you have your financials all together? Oh, I don't want to look at my financials, right? You can't do that. So start with the end in mind and go, okay, what do I need to do to deliver an optimal outcome? Obviously it has to do with, you don't want to be in the Shark Tank and people would say, you're out because you don't know your numbers. You don't want that. But and also, I want your listeners to know, your viewers to know, numbers actually tell a story. I mean, as much as your brand tell a story, you stand in front of a podium, or your salespeople, tell a story. Your numbers tell a story to your target, acquirer. And you have to not only have to have your numbers just by itself telling the right story. When you go to exit, you need to have a professional. If you can't do it, you need to have a professional to be able to tell the story. This is kind of like a sales guy, but, in integrity and knowing how to tell your best story in the best way. So that's part of it. But as you're building with knowing the end in mind, is what is it that who would want you and why, right? And it's either the how, the what, and the who. So it's either your customer base is attractive to people, your IP, hopefully you protect it properly, your systems and processes, right? And, maybe your team. And maybe when what you have is able to cross over to somebody else's client immediately and give that 10x or 8x or whatever. So you need to know what it is, and then you need to defend it aggressively and offensively even. I use those words because that's your power. And if you let it seep out, then your multiple would come down.
Yeah, and I think there's wisdom in that too. We call it the old lipstick on a pig thing. There's too many times people try to hide their weakness and they're embarrassed of it. And really, many times the weaknesses that you see in your business are opportunities to the acquirer. But if you hide it and you don't get out in front of it and own it, and the acquirer finds it, now they're like, look, this is a steaming piece of shit. But if we come in and say, look at this opportunity that we haven't explored, it changes the whole frame. And I can count many deals where we've gone through and taken that approach where the seller gets a better outcome because we just took a little extra time. We didn't slap their listing on the market and use pressure. We said, no, we have to prepare. This is all good.
You know what you do that is very worthwhile is when an entrepreneur, think about exit, they just kind of look at themselves, and they're normally quite myopic in whatever it is that they're engaged in. And I would say that the majority, if not more than majority of entrepreneurs, they don't have the habit of looking out into the marketplace and see what everybody's doing and what the trends are, or looking from the outside in and go, okay, what does this look like? And when you get involved, you say, look, let's do an audit or analysis, whatever your offering is called. Let's just look at what the risk and opportunities are, and you can help them carve out the multiple, or aiming at a multiple, or hey, you know what, let's get this thing done first and then we'll put it on the market. It's kind of like when you sell a house. Do you want all your furniture to be gone, or do you want us to stage your furniture so that the house looks prettier, right? So it's really what that is.
Yeah. And the thought on that is, the takeaway thought on that is, the sooner you start thinking through that, the more control and the more power, the more leverage you have on your own exit. Because if you wait till something bad happens and you have to sell, your options become limited.
There is one more piece, is always leave something on the table, because when somebody buys you, okay, so first of all, it's the synergy. Strategic buyers always pay more than a financial buyer. So what makes somebody strategic is when 1 + 1 is equal to more than 2. But more importantly, if you really think about selling, you don't try to sell at the very top of your ability to maximize as a company. You leave some on the table. At least you talk about leaving something on the table, that these are opportunities that we haven't pursued. So there's an upside thing. And with the other side being like, hey, we're mighty man and we can make this happen. Then all of a sudden they go, okay, I see the extra upside I can get.
We call that, there's still got to be gas in the tank. You can't run on fumes to the closing table.
Right.
This is awesome. We'll do this again. Like we can talk for hours on all of this stuff. So we'll put some contact info for you down in our show notes. We'll put a link for someone to get a hold of you. But this is great. I'm so glad we met, we connected, and we did this. Thank you. Thank you for being here.
I appreciate it. I really appreciate the stuff that you do, the work that you do for this community. It's, it pays forward.